Okay, I think without further ado, I think it's best for me to start the presentation tonight. Great. So I think firstly, welcome to one and all to this understanding SGX REITs opportunities in the later rate dot seminar. My name is Marcus. I'm actually the country head of the direct sales team here in Hong Kong. Welcome. So what we're going to go through today is what is described over here on the topic. But I think before we go into the topic, I thought it would be good and informative for us to first share a little bit more about who Saxo is, so that you get to know us a little bit more before we get into the proper topic. So before I get into the proper topic, just wanted to share the disclaimer over here. This is quite standard where you will see around when you invest or when you attend a seminar like this. So the disclaimer is that whatever information that we share today, please take note that they are not any kind of advice for you. So please, before you make any kind of investments or trades, do it with more knowledge on your side and more considerations from your side. Thank you very much. Now, moving on to introduction of Saxo. So the purpose for Saxo, we get curious people interested in the world. So who we are a fintech startup with over 30 years of experience as an industry pioneer. So over here, you can see at the start, my CEO, Kim Foley, he launched the brokerage 1992. And this was the phase where it slowly grew all the way to 2008 to 2017, launching the Saxo Trader Go and focusing on the trader segment, and then further developing the Saxo Bank into the Saxo that we know today, here in the so-called third phase of our development for Saxo right now. So a bit of an introduction about us. We have over 15 offices in leading financial centers. We have a global reach and scalability. So in Europe, you can see that we have many offices. Where in Asia, we are actually, APAC HQ is in Singapore, and we are housed here in Hong Kong, Shanghai, Tokyo, Sydney, and we also have our offices in New Delhi as well. So to talk more about the business. So how we see ourselves is we are a global facilitator providing capital market access through our multi-asset platforms. So in terms of what we see and what we do is we facilitate the connection between the capital markets to distributing it to our partners, such as the institutional partners or retail clients on the traders and the investor front, or the wholesale and the direct institutional front. The products and platforms and also the services that we provide. So firstly, we have three platforms altogether: Investor, Pro, and Go. So for Saxo Investor, it is a very simple and intuitive platform for clients who are interested in investing in cash products. This is the platform for you. Next, we have our award-winning Saxo Trader Go platform, which is browser-based. It's very easy for you to use to trade multi-assets. And at the same time, it is an app on the phone that you can use as well. Last but not least, if let's say you are the professional, you would like a multi-screen setup or you like to customize your workspace, Saxo Trader Pro can be the platform for you. So this is our multi-asset platform, and this is how we support not only our clients, but also our partners. And these are the products that we can actually provide for clients who actually join us as a client. So to talk a bit about our organization. So our board of directors consists of a representative from GB, who is actually a majority shareholder of ours. But at the same time, many other experienced board members that are on our board of directors as well. That includes the CEO of Vesta. So it is important, I think, to introduce our executive team, where our CEO is Kim Foley, who is actually our co-founder as well. And this is our executive team, which is actually European-based. So with that said, this is a quick introduction of the organization. right now I'll hand over to my colleague Chris, who will share more about SGX REITs. Thank you.
All right, thank you very much, Marcus, for the good introduction, and a very warm welcome and thank you for having me. My name is Chris Lum, Regional Head for Digital Sales in APAC region. I come from Singapore, and this is a visit in Hong Kong, in this beautiful island, and it's really great to be in Hong Kong again after COVID. I'm feeling the vibrancy of the city. It's really very beautiful, and it's still the Hong Kong that I love. So it's very nice to be here.
How is it compared to Singapore?
It's cooler. It's definitely cooler. Hong Kong has a cooler weather, especially right now, compared to Singapore, which has very warm weather. In terms of the vibrancy, I feel like a lot of people are saying that a lot of things are shifting towards Singapore, but I do believe that Hong Kong will always remain as a very major financial center, and you can feel it just walking on the streets and then seeing the business over here. So anyway, what I brought from Singapore here today is also a presentation of something that's quite dear to my heart and something that we are all quite familiar with in Singapore. But also at the same time, also we want to share more information about the real estate investment trusts that are actually listed in Singapore, and then tell you a bit more about it from a basic angle, and then why they are actually something to be considered for investment. So without further ado, being endorsed by the Singapore Stock Exchange as well, real estate investment trusts, which are known as REITs, are a very popular investment tool and asset class within the Singapore Stock Exchange entire offering. And you can see that from different asset classes, we've got stocks, we've got REITs, we've got fixed income. And what exactly are REITs, right? So REITs, real estate investment trusts, they are basically property plays where they are broken down into industrial, retail, commercial, or hospitality type of place. And maybe later on, I'll show you that it has also advanced further into different types of plays for your investment needs. Now, the key benefits of REITs also is that firstly, it offers diversification. So a lot of people go into REITs because maybe they don't want the hassle of investing in property, for example. If you go into a REIT, it's listed on the stock market. You don't have to, go to the person at the shopping mall to collect rent from them and all that. Whereas everything is invested via the stock market. From a tax and regulatory perspective as well, there's a dividend policy of at least 90% of income being distributed to shareholders, so it's quite lucrative over there. In terms of total returns, also REITs has always been quite resilient, especially now in an inflationary market. There are a lot of funds going into REITs as well to compete, even though interest rates are also rising. Now, last but not least is liquidity also. If you buy into a property and then suddenly you need the cash and you want to get out, it is, there is a long leg time to actually sell and then get the proceeds. Whereas in REITs, anytime you need to get out, you can quickly sell and get your cash from there. Also, what are REITs? REITs are funds that invest in a portfolio of income-generating real estate assets. As I mentioned, things like shopping malls, offices, hotels, industrial properties, and the aim is really generating income. So REITs will pay you income. In some countries they may pay you on a monthly basis. Sometimes they pay you on a quarterly basis, or half yearly, or even yearly also. The assets of REITs are also professionally managed, so there's always a professional manager, and the revenues generated from the assets, rental income, are normally distributed at regular intervals, as I've mentioned, as dividends. Then also, units of REITs are bought and sold on the stock exchange. So even though I'm mentioning Singapore Stock Exchange REITs, there are REITs actually in Hong Kong, there are REITs in Japan, in Malaysia, and just about most major exchanges worldwide also, which Saxo actually offers. So even if you don't specifically want a Singapore REIT, you could invest in Hong Kong REITs through Saxo as well. The distribution per unit is an important metric. So, when you invest in REITs, it's not like investing in growth stocks where you're hoping that the price of the stock will actually fly up and then earn a lot of money. For REITs, you are looking for more stability where, the recurrent income that comes on a quarterly basis, helps as a dividend yield. And then in addition to the DPU, of course, investors also hope for capital gain. So if a REIT is very well managed, they will constantly be adding more and more properties into their portfolios. They can manage their yield very well as well. And as they are being distributed to shareholders, you get, a growing yield as the REIT actually grows as well. And this is the REIT structure where you can see as an investor, you will be the unit holders, and then there are lenders involved, there are trustees involved, the asset management company, which is the manager of the REIT, is also involved. And then you have the properties also, where the properties also need to be managed by the property manager. So why Singapore? So Singapore is actually one of the largest REIT and property trust market. It is actually very popular, primarily because a lot of the properties in Singapore, whether it's retail or residential and all that, have already been converted to REITs. So there is a very large base there of very big names. But at the same time, also over the years, the Singapore market has actually attracted a lot of REIT managers from overseas as well to list in Singapore. So as you can see, the Singapore Stock Exchange has 42 REITs and property trusts with a combined market cap of $98 billion. But you see, in terms of regionalization, there are 4 trusts in South Korea, 2 trusts in Hong Kong, 6 trusts in Malaysia, and so on and so forth, which actually gives you more regional exposure and diversification also. And you're not just investing in a REIT doesn't mean that you're just investing in Singapore, but also around the region. So you can see SGX is a leading cross-border REIT hub. So over 80% of S-REITs and property trusts hold overseas assets. So these are some of the big names that are actually listed in Singapore that actually have holdings globally. Now, S-REITs also offer a wide diversity across property sectors. So as I mentioned, these are 4 main property sectors. So retail REITs, so there are a certain segment of Singaporeans or overseas investors also, they say, I want to invest in a REIT where I can see it on a daily basis. I go to the shopping mall and I can see how busy it is, what the footfall is, are all the shops tenanted out and all that. And that belongs to the retail REITs also, the retail REITs. So an example would be like Fraser's Centrepoint Trust. And then you have the industrial REITs. So the industrial REITs, they rent their property to those manufacturing firms, industrial type of companies, where it's a huge industrial play from that front. Then you have hospitality REITs. So hospitality REITs are quite the rage recently because post-COVID, a lot of travel has been coming back. A lot of people want to stay in hotels and things like that. So a lot of the hotel service residences are part under hospitality REITs as well. So if you think that travel is coming back to normal, then that is definitely something you want to look at. And then last but not least is office REITs. So office REITs, just for example, Saxo in this building, we have to pay rent to the landlord, and you convert the whole building into a REIT, together with different properties also. So these are the 4 major REIT plays. It also offers growth opportunities for every REIT. There is asset management, asset enhancement, merger and acquisitions, rental and occupancy, and then prudent capital management also. And this is really how you define what type of REIT you should invest in for the long term. Usually, most people will invest in REITs for a medium to long term play because you want that yield rather than just waiting for it for a few days and then hoping to sell off the capital gain. In a NAREIT study just very recently, it's shown that REITs actually outperform in the longer term. So you can see over here, annual net total return and expense by asset class for US. So even the US has REITs as well. They are actually one of the best performing over the last 20 years.
Best performing is?
Best performing is private equity. Yeah. Now, REITs also have solid fundamentals. So 2022 has been quite a challenging year. There was still a lot of countries that were not totally out of COVID. You know, travel had not really come into play, especially in the first half of the year. But still, a lot of the REITs in Singapore has been very resilient. You can see over here, specifically for Singapore REITs, you know, it has had very good total returns compared to the rest of the REIT market worldwide. They've also demonstrated competitive return over the years as well. So some people actually do buy REITs, you know, with the hope of capital gain. So they maybe buy REITs based on a sector that I mentioned, one of the four. If you think that travel is opening up, then you know people start to go really heavily on retail and hospitality REITs. But at the same time, also they hope that the REIT manager will manage it properly, you know, and increase rents, and therefore, you know, there is more return to shareholder thereafter as well. And the average dividend yield also is actually very attractive. Now I know that because interest rates have been rising, a lot of people are actually looking at REIT yield and that versus current interest rates as well. So we don't really push for which one is really better. But when you look at REIT plays, you know, you go for the REIT yields. You can see like retail REITs in Singapore can command up to 7.7% per annum in terms of dividend yield, and that is quite massive, especially considering we came out of a lower interest rate environment. On average, you know, your office, industrial, or even the diversified REITs are getting you at least about 6%. There is also resilience in diversification. So this is a new category of REITs that has been becoming more and more popular, and that is the diversified REITs. So usually diversified REITs are a merger of two different REIT classes. So you can see one of the biggest REIT players, CapitaLand in Singapore, they actually merged their retail side and the commercial side also to have a REIT by the name of CapitaLand Integrated Commercial Trust. This kind of diversified REITs are getting more and more popular because you get a good diversification just in case one industry is not performing so well, another side of the industry will prop it up. Now, some people will also ask, you know, what about REITs around the region, right? So we don't just compare with Singapore alone, but you can see over here, you know, there's some data of the REITs around the market. Now, even in Hong Kong, you can see there are 11 REITs with a market cap of 33 billion, with even higher average dividend yields also. So you can actually get quite good REITs in Hong Kong. And of course, you know, if there's interest from our clients, we will definitely be doing another seminar or webinar on Hong Kong REITs as well. You can also see in Australia that it is quite popular for different REITs. And then in Japan, of course, it has the most REITs, in fact, and with the highest market cap. However, the yield is not as high because Japan is in a low interest rate environment. So 4.3% is already considered quite high as an asset class within Japan. Also around the region, there are some statistics over here, you know, just to compare Singapore versus other countries' REITs as well. You know, most REITs usually are tax exempt, but in some countries they are actually taxable. So you need to be careful of where you're investing these REITs are. For Singapore REITs specifically, you know, there is up to 50% of deposited property to keep it well leveraged. Okay, but there are some countries where there's no restrictions, so REIT managers can actually leverage these plays quite a lot. Also, the percentage of real estate, 75% of funds deposited has to be invested in income-producing real estate as well in Singapore. There is no tax for individuals who invest in Singapore REITs. And then there is a management structure which is quite prudent, external manager with at least a 5-year track record. In terms of distribution, most REITs distribute about 90% of their taxable income.
They have to distribute 90%?
Yes, so this is mandatory. If you want to list as a REIT, then you have to distribute 90% of distributable income. That's right.
And what do they do with the other 10%?
Usually, the other 10% is for daily expenses, you know, and stuff like that. Yeah, that's right. So I think it's quite reasonable, to be honest. Yeah. And then you look at the latest data out of 2023. In January, you know, S-REITs actually reported 7% gain. This capital gain also. So it shows that money is actually flowing to the REITs in spite of a rising interest rate environment. A lot of people actually feel that REITs are a very good hedge against inflation because when prices go up, then rental actually goes up, and then the shareholders will benefit as rental also goes up. Now, there are some people who are fearful of investing in specific REITs. So maybe you do not want to buy one single REIT because maybe you are fearful that it's not diversified enough and it's one just it only concentrates on one sector. So there are actually very popular ETFs also. So these ETFs basically are exchange traded funds. They are a collection of REITs within that are actually listed on the Singapore Stock Exchange also. So for example, the Lion Global S-REIT ETF, you know, it's 100% invested in REITs that are in Singapore, and then it passes on the dividend yield from these REITs onto the shareholders also. Of course, because of its diversification, the dividend yield may not be as high as if you bought an individual REIT. That being said, also, you know, we do warn that you should not always chase after yield. Like just because it's paying the most yield does not mean that it's the best REIT, because you know there may be underlying reasons why it's giving you such a yield as well. So these are some various REIT ETFs that we can see. These are more diversified. So you can see like the Philip SGX APAC dividend leaders. It only has 34% weightage in Singapore, whereas 52% is in Australia, and 11% of its properties are in Hong Kong. So this is for diversification purposes, but also gives you more regional plays even on ETFs. So just to summarize, you know, the key benefits of investing in REITs. Firstly, you get regular dividend-based income. So a lot of people, you know, even myself included, you know, you have a REIT portfolio where on a monthly basis or on a quarterly basis, there's dividend income coming in, so it's actually quite nice. You know, you get a bit of pocket money. There's competitive market performance also. So as I've shown, REITs are actually quite good in terms of capital gain performances as well when you hold it for the long term. As long as you know you can see the property over there, you know, and it's doing well and it's bustling, usually that property itself will be doing quite well. It has transparency and liquidity also. Being listed on the exchange, you can buy and sell anytime in case you need the cash whatsoever. Then for inflation protection, as I mentioned also, inflation protection is a very good hedge. And lastly, for portfolio diversification. So if you have a very large growth stock portfolio, or maybe you're trading in futures or FX, you need to consider REITs, you know, as something that is slightly more stable, slightly more long term, that will give you good pocket money or yield, you know, over a good period of time also. Also, key benefits of trading REITs with Saxo. So because in Saxo we have so many different products and so many markets on the platform, you know, even if none of the Singapore REITs interest you, you could literally buy one Singapore REIT, one Hong Kong REIT, one Tokyo REIT, and one US REIT, and then you can all buy it on the Saxo platform at very competitive trading commissions. Also, our trading commissions, online trading commissions, are actually very low. There is a full investment portfolio breakdown also for overview. You can see your P&L very easily. You get your dividends all reported very nicely in the account statement. Again, access to a wide range of other asset classes also. So we get a lot of clients who actually consolidate a lot of their investment portfolios. You can have our latest rollout, the digital wealth management, Saxo Wealth Care, while you're also invested in REITs, and then while you're invested in Tesla, then you're invested in, you know, oil futures and all that, all consolidated on one single platform. There is world-class customer service also. Whenever you call, you can call us, chat with us and all that, and we will actually assist you with any questions that you have. And then lastly, an award-winning desktop and mobile platform. This is one of our strongest selling points. Our UI is actually one of the best, whether it's on the mobile or on a browser base as well. Yep. So with that, I will hand it over to Marcus one more time just to show the platform and show how you can find REITs. But I do thank you for your attention and thank you very much for this introduction.
Great. Thank you very much, Chris, for the introduction. So let me switch over to the platform now to go through a little bit more about the platform demonstration. So over here, what I'm demonstrating here is our Saxo Trader Go platform. And effectively, it's distributed into 3 sections. But for the purpose of today, what I will actually go through is under the trading section, how you can use the screener function to actually help yourself find the REITs that are listed in Singapore, as an example, and how you can actually add it to your watch list so that it's something that you can monitor, then actually take a decision to whether you want to invest in it or you want to do more research on it before doing the investment. So now, how you can get here is going to trading, then under screener, there's a filter here that you can actually use. So the first thing that we can do is actually select the instrument that we would like to filter down for. So in this case, I actually select stocks. Next, in terms of countries, I can select in terms of either country or exchange as an example. In this case, I actually selected Singapore for the purpose of finding Singapore REITs. Then in terms of market capitalization, this is something that you can kind of like filter if you want to. And the other thing that I will do is, if let's say I want to find all the REITs or all the trusts in Singapore, I kind of distribute it into like a 2-step process using the filter function. So number 1, I can actually search for REITs specifically here. And let me just kind of remove this. Reset all filters. So if let's say the countries under stocks, I choose Singapore. So there's over 250 selection now. Then I can actually search for REITs. Yep. So this is the list that can be filtered right now. So for example, Maple Tree, Logistic Trust, Capital REIT that we saw earlier in the presentation from Chris. So you can actually change the filter over here using, change the columns by managing the columns in this particular manner. So as an example, because in this case, we want to look at what is the dividend yield from using the REITs, right? So these are the different columns that you can actually add to from the left-hand side to the right-hand side under dividend yield. And what you can do is actually, over here towards the extreme right-hand side. And if let's say you want to kind of like filter it towards which dividend yield is kind of the highest versus the lowest, there's a simple filter that you can apply for. Now, if let's say you're comfortable with what you have found here, and what you would like to do is actually move away from the screener and add it into a watch list that you can kind of just monitor every day or as and when you will want to. What you can do is over here, you can add the result either to an existing watch list or as an example, save as a new watch list. So let me try to use this and I will say SGX with watch list. And I can do that. So what happens is, if let's say I switch over to my watch list over here, it will appear as the watch list that I have filtered earlier, and we can easily view what is required here. Then coming back to the screener portion, now other than searching for REIT, some of them are listed as trust as well. So again, under Singapore, this is something that I can filter for, and there are a lot over here. And what we can do is add the results to an existing watch list. So I can select whatever I have created over here and add it here. So once done, we switch back to the watch list over here. and we can see that they have been added into this particular watch list for us to just more specifically look at SGX REITs or any of those trusts. So let me see if I can pull this. Okay, so earlier I mentioned that this is actually 3 different sections. So now if let's say you would like to look at the price movement, you can actually do that as well. And there will be the chart over here available for you to toggle and look at how the price of the particular REIT or trust have been performing. Now, if let's say you would like to look for some more basic information, you can also click on Product Overview, where every time you actually scroll through the screener function or effectively the watch list function, you can look at what are the basic information for this particular counter, looking at the price movement and what are the codes and a basic description of what this is about. And if let's say you are interested, you can look at what are the other counters that others are interested as well when looking at this. So it can be very informative and helpful for you. Now, as an example, if let's say you want to get into a trade and kind of, for the demonstration purpose, what you can do is you can actually click on either the bid or ask price, the ticket will actually open up. Now, make sure that if let's say you are a client with us, you may have multiple currency accounts. So if let's say for the purpose of this demonstration, you are buying a Singapore real estate investment trust, that will naturally be denominated in Singapore dollars. So it makes the most sense for you to have a Singapore dollar account to actually buy and hold a position in, so that there's no currency conversion. So to that end, make sure you actually select the correct sub account. And then we have different types of orders that can help you to enter the market. These are things that you can view from here. And if let's say you have any questions around them, you can always feel free to reach out to any of us here, either in customer service or from the sales team, to actually assist in explaining to you. And from there, you can actually put in how many shares do you want to buy, as an example, very simple, and select the price that you want. And once you're comfortable placing order, there will be a final confirmation page. Before you're comfortable, then you can actually place the order. Now, let's assume that if let's say I place the order right now, the order has been placed, it will actually show over here. And you will see very conveniently under the orders tab that this is an order that is kind of live right now. And let's say, for example, since I'm demonstrating only, I'm going to cancel this particular order. Now, instead of canceling only, I can actually modify as well. So I can click on the modify button, and it's easy for me to change so that I can change it to the price that I want. And last but not least, what I mentioned earlier, I'll cancel this order because this is how we can do it. And the order confirmation will actually be shown here. Yep. So I think for the purpose of this presentation and also what Chris has shared earlier, he also shared that if let's say you would like to be even more diversified than what the REITs have to offer for you. So what you can look at is actually some of the ETF that was shown earlier. I kind of just showed 2 that you can actually find. So there's the Lion Philippe S-REIT ETF, and then there's also the CSOC IH S-REIT Leaders Index ETF. And just to kind of demonstrate how easy it is to add it into a watch list so that you can monitor and invest here and invest into it, really, you just need to go to add instrument over here, search for the instrument, say, Lion Philippe. Yep, so you don't even have to type on the whole thing. And you can just select and it will be added in so that you can monitor and adjust the columns or anyhow you want as well. So this can be dragged so that you are more comfortable. For demonstration purpose, I'm kind of moving this thing around so that you can see that these are things that can be moved around for your benefit. And I think for the purpose of demonstration for Singapore REITs, this is what I like to show you, especially using the screener function to help you filter and find what you can find. Or if let's say you want to find Hong Kong REITs or Australian REITs, this is actually how you can use the filter to your advantage, shortlist them, and then decide on which is the best one for you to actually get into. And then you can migrate them into the watch list for you to monitor on a longer term basis, while you use the screener function to find any other thing that may be of more interest to you. So I think with that said, I would pause here. And if let's say there's any questions from the crowd or from anyone online, I would be happy to help answer them right now. Yes.
I heard data center REITs has become very popular nowadays. Is there any data center REITs listed in SGX?
Yes, I think if let's say going back to the slide over here.
What are data centers REIT?
Sorry.
What are data center REITs?
So data center REITs is like, for example, if let's say earlier what I saw in the slide is in India. There are kind of like data centers where effectively a lot of the cloud storage facilities can be, and it's kind of the hype right now, isn't it? Where a lot of the storage facilities are really going to the cloud, and that's where the data centers.
They perform better than other REITs?
I think they can. How can I say this? Sorry, which one?
Just lower down. Yeah, I think this one.
Yeah, correct. So earlier what I wanted to mention is actually the Capital Land India Trust. So for this one, it actually invests and develops data centers in India. So which is considered as the second fastest growing digital economy in the world. Now, I think kind of taking it all together, earlier what Chris went through as well, is that in terms of retail REITs, that seems to be better yielding right now, at least in terms of a total return point of view. But this is where personal opinion or even personal investment preference can come in. Where if let's say you feel that data center is the future, and if let's say data center REITs, you actually believe that in the future, the yield they can provide is better, that is where you can get in as well. Because I think in investments, what I can say, it can be a mixture of investment preference and then also what you think about it and where a comfortable level is at.
So for data centers is popular these days because a lot more companies are storing information into the cloud. Then you have all your cryptos and all that where they need a lot of hub-based technology to store that. So a lot of companies, they need to rent the building to store all the various servers for different companies to protect their data. And then these are data centers. Yeah. So that is coming up quite rapidly. Even in Singapore, there is like the Keppel DC data center REIT also, which is also quite popular even within Singapore. Yeah.
But when you mean popular, does it have a better return than the other REITs or not?
So,
like you said, hospitality or retail or
that is a great question actually.
Perform better.
In the last 6 to 12 months, actually, the yield has been surpassed by retail and hospitality because
So it's lower.
It's lower now. But maybe during COVID, it was getting very popular. Everybody was using Zoom, and all that. So all the servers, they needed to really prop up more space for that. But once,
People are happy to be back to the real life.
Then they go to the shopping center.
Exactly.
Yeah. So sometimes when you are considering investing in REITs, also you need to look at the trends when you are going out on the street, and all that. It does make a difference.
Yes, and if I may add on to what Chris had mentioned, I think in the early parts or the middle part of COVID, if you will, one can argue that is office REIT is it still something relevant because the work from home trend was so strong, and there were talks about is the office space still relevant, and that actually put into question whether office REITs in that sense are going to be profitable in the future. The interesting thing coming out from that particular episode, if you will, is that in terms of people returning to the office, there is actually a very strong demand from a lot of different companies out there. Although there are some that have chosen to be a lot more flexible, but there's a very interesting kind of view, if you have one, to perhaps look at something beyond office REITs and look at something more retail as an example.
Yeah, this whole office REITs is actually very interesting because even within office REITs itself, there has been this growing trend where, in Asia, everybody wants to go back to the office. Well, that is the trend. But conversely, when you look at the US, it's totally different. And so the office REITs in the US are actually suffering right now. You see the stock price has gone down a lot.
It's a green. I don't know if you follow.
Yeah, so
And they keep
everybody
talking-
prefers to work from home. You know, it's more popular over there. I think maybe US companies are also allowing more work from home. So a lot of companies are actually downsizing. You know, you look at San Francisco, the office space within the city is A1 properties. You know, the demand is actually one of the lowest it has been, and the US has actually opened up. You know, so there's no one wanting to take those office space. Whereas in Singapore, in the CBD or even here in Central, you know, it's still you know, the
But
office
the
rents are
REITs,
still
they
going up.
don't perform so well
Sorry?
in Hong Kong. In Hong Kong, the REITs, they don't perform so well.
I think there is, this is my own perspective. I think Hong Kong has just started to open up. You know, I was telling Marcus before I came here, when I look at, you know, a lot of Singaporeans just love to travel because we're such a small island, right? And Hong Kong is a favorite destination. But because it has just opened up, I think it has created a scenario where the flight tickets are actually one of the cheapest, which is quite surprising. You
From
know,
Singapore to Hong
from
Kong.
Singapore to Hong Kong. Whereas flight tickets to Taiwan, to Korea, to Japan, oh my God, we had it for a whole year. They've inflated it so much, it's ridiculous.
The whole world has inflated all the
Yeah,
travel.
exactly. So a lot of people in the next few months want to come to Hong Kong because you know it's slowly opening up, and then it's still affordable to fly here. So I say wait for the next few months, and you'll see it's going to get very packed. It's not you don't really see it now, but I think slowly, day by day, week by week, you see more and more tourists will be coming back to Hong Kong. At least that's my observation.
You know what I
from
think is
Singapore.
happening in Hong Kong now? They reopened. They organize a lot of events and they want to show the whole world that Hong Kong is back to
I think so, yes.
to before. But I do believe that a lot of tourists don't come to Hong Kong yet. Right? And I think that because of they have figures and they want to show to the world that it's really reopened and that there is a lot of border traffic between, that I'm not sure if they pay the two groups, but I think they bring a lot of tour groups from China to Hong Kong on a daily basis, every day, very, very high numbers, just to say that the figures are high now. That's what I feel.
I see. No, but I can tell you from Singapore. So Hong Kong, I think Hong Kong government knew that Singaporeans love Hong Kong, right? So they had this promotion, free tickets, you know, and they did it with Korea, Japan, Singapore, but they allotted quite a lot to Singapore.
They already gave the free tickets.
They gave the free
Yes,
tickets.
they
I think they were giving out like 10,000 free tickets.
Yeah.
And there is no restriction whatsoever.
No restriction.
You win the lottery, you have your free ticket.
Yeah.
One
No, but
person-
well, the Singaporeans later found out that you have to pay the airport tax.
Okay, but
But
which
that's
is
beside
more
the
money,
point.
which is more
Yeah,
money.
yeah. But that's beside the point. So 10,000 free tickets to Singaporeans. The moment the thing opened, in 15 minutes, it was all balloted
Same
out.
in Bangkok.
Yeah. So there were 150,000 applications for the 10,000 tickets to come to Hong Kong. It was amazing. I was shocked to see so many people.
And the website crashed.
The website crashed. It came out for 2 minutes and then crashed
Yeah.
again. Yeah. But it's a good observation. You know, these are the things that will help you decide, you know, how the REITs are going to evolve and what you want to invest for the long term also.
So I think with that said, thank you very much for your questions and really appreciate everyone coming in here today. So if let's say you have any questions, feel free to stay back, post the questions over to us. And if let's say you have any questions online, please feel free to drop an email to us or reach out to our customer service representative. We'll be very happy to help you with any of your queries. So with that said, I conclude the seminar here today. Thank you once again.
Thank you.
Good night.
Thank you.